Hello, welcome back. This is Rajat Bose here. Now we are going to deal with the 22nd edition of our weekly stock recommendation, stock reviews and market outlook. The stock recommendations would comprise 2 PSU stocks. Watch them, they are good long-term bets. Stock reviews would have 3 important companies whose stocks I am reviewing. And where is the mid-cap going? What is the situation out there? What fresh information I can suggest? Apart from that, the regular Nifty and Bank Nifty discussions are there. Our first dispatch is on the Nifty. How is the Nifty looking? Has the top already been made? What is it suggesting? How far up it can go? Pullback rallies, how much strength they can have? And what is the critical level below which we would say that a top has already been made? Keep watching. Using the monthly chart of Nifty, what we find is that the situation is not all that bad. If you look at the monthly chart suggests that we have seen a course correction. Maybe we have seen a top also, the 22.22, but we cannot be so certain that we have already had a top at 22.22 unless 18,950 is broken. Then we can say with some conviction that probably a top has been made. But this top would be confirmed only when you see the Nifty falling much further down, at least 18,500 kind of range. If that were to happen, those levels were to come, then we can say that a top has already been made. But now it is plausible to say that a top has been made. Now, when you look at the daily chart, you will find that in the daily chart there had been 9. If you look at the last 9 trading sessions, only 2 sessions we saw green candle. That was last Wednesday and the last day, that is Friday 29th of September. We found that those 2 days had been green candles, otherwise there had been gaps, there had been 7 red candles. So definitely in the short term the market has become pretty weak unless it recovers very strongly, and initially it needs to take out the range between 19,700 and 19,800, primarily because the 9-day moving average as well as the 20-day moving average, these are located within the range of 19,700 and 19,800. That is the bare minimum that you need to take out to show some strength. If the bulls are able to do that, great. Suppose if bulls lose the battle and once again the Nifty starts moving down, you need to watch out for the levels of first 19,500. If 19,500 gets taken out, then you will have to see whether 19,250 gets taken out or not. 19,250 to about 18,950, this 300 point range would act as a strong support zone. If this support fails to manage the job for the bulls, then what will happen is that we can see the Nifty coming further down. When it comes further down, what you can see is that there is considerable amount of support around 19,500 and major support exists between say 19,250, that is the major support area. Prior to that, 19,600 to 19,500 would be another strong support area. When you look at the monthly chart, you can clearly see one thing, that is the monthly chart suggests that there is a sideways movement for the last 3 months, that is July, August, September. July, August, September, more or less similar kind of range, except in September we have seen decisive move above the 20,000 mark after beating the June high of 19,991, the July high of 19,991. Then in the month of September we saw 22 as the high, but so long as the monthly chart Gann angle that you can see, the support level would come around, say, close to about 20,000 level, because it is upsloping. So the bulls need to push it above the 20,000 mark, but the next support on the Gann angles will come around 18,500. This 18,500 to about 18,300 would be a very strong support area. That being said, the Nifty is critically poised. If it were to go below 18,950, then it would become very weak, and if it manages to get past 19,800, it would again acquire some strength. Bank Nifty has been trying its level best to move up. Would it sustain above 45,000? Would it go above 45,000? All these we have to study. We did. Just watch out. The weakness in the Bank Nifty is clearly visible on the monthly chart when you see that it, after testing a high of 46,310, it touched a low of 43,830, finally managed to close at 44,584. So that is the trajectory of Bank Nifty in the month of September. However, it has not tested a key Fibonacci support around 42,808, which is roughly something like 1,700 point from the current level. So as such, neither the 9-month moving average of 43,344 nor the Fibonacci level of 42,808, they are still farther off, at least from 1,200 to about 1,700 points away. So Bank Nifty still has a chance. From a monthly chart perspective, Bank Nifty continues to maintain the uptrend. However, one thing one needs to consider is that it is getting a bit weaker and the momentum is flagging. So there is a possibility that we may see a test of at least the 9-month moving average at 43,344 if things were to turn adverse for the bulls and the bears press greater sells. Going by the private banks and their chart formations. Why I say private banks? Because the big private banks are having a much greater weight in the Bank Nifty. So Bank Nifty performance is fairly dependent on them. If they underperform, then definitely Bank Nifty might actually see lower levels. But from a monthly chart perspective, things are not all that bad. That's what I would like to say here. And now look at the chart of Bank Nifty from daily and say weekly perspective. What you now notice is that Bank Nifty on the in the daily chart as well as on the weekly chart, you will see some kind of a double top kind of a formation developing. This formation means that there is some kind of resistance, some kind of selling pressure that is coming at higher levels. So chances are that if 44,000 mark gets taken out, then 43,500 to about 43,000, these levels might be seen in the month of October. and unless 46,000 to about 46,700, this supply zone is decisively taken out by the Bank Nifty, you will not see any major upthrust in this index. When CNX midcap moves up in a big way, it can also come down in large proportions. How is it doing? Watch out. The CNX midcap index on a monthly chart, it is cruising ahead. Of course, there is an inverted hammer line or a spinning top kind of a thing that we can see. It is a negative formation, yes, but it is still a green candle. But this is the 7th month running for the CNX midcap on its upward journey. But as you can see on the monthly chart, that CNX midcap has the habit of continuing with positive green candles on monthly charts. It has happened during 2020, 2021, and now also it has started happening. But the further it goes before another major correction happens, it becomes a bit risky. But it isn't as if that this kind of a one-way traffic is something that is not seen in the CNX midcap. It is not the case, because CNX midcap has the habit of doing so. But one thing that we need to be a bit more concerned, which I highlighted last week also, that is CNX midcap, when it gives correction, it gives a correction of, in absolute terms, from 25% to 50%. So we need to be somewhat concerned about that. But so long as the CNX midcap doesn't stop its upward movement, we cannot say that we have had a top in the CNX midcap. And CNX midcap is the most resilient index among the 3 indices that we track, and over the last 7 months its performance is unparalleled. On the daily chart, what you find is that CNX midcap is moving sideways and the RSI is losing strength, but it hasn't gone below 50. In fact, the last close of the RSI has been 58.98, that is 59, is still 20% above the 50 mark. So now we need not worry so much, but only thing is that part profit booking should be done, because the momentum is definitely diminishing, that is for sure. We have now come to our stock review section. From now on, what we would do is that we would see what can be a possible target for these review stocks, and below which, where it becomes negative. Those levels will also be there in the stock reviews. Watch the next 3 stock reviews. One of you have asked for a review of Kotak Bank. We review Kotak Bank and I am using the weekly chart. See the comment on the chart itself, that observe the distribution around the level of 2000. When you look at the Kotak Bank chart, you find that Kotak Bank has been moving between, say, 1800 and 2000 for the last couple of years. Minor excursions on the upside or downside notwithstanding, we can say that it is moving between, say, 1750 and 2000 range. So unless 1750 and 1750 on the lower side and 2000 on the upper side is decisively breached, there would not be a trending move. Of course, one can, if you can buy around, say, 1750 or so, and if there is a bounce back then you can expect 2000 on the upside. That's a good trade, no doubt about it. And of course the 200 week moving average is currently located at 1700 levels. So that's the reason why I am saying 1700 should be closely watched on the downside, and 2000 should be closely watched on the upside. But to my mind, it looks as if it is a distribution, and there will be some kind of a larger correction which can go below 1500. So be careful with Kotak Bank. When you look at the monthly chart of Kotak Bank, you find that the distribution pattern is even more strongly visible, and the negative divergence. Look at the rectangle below on the RSI chart. The RSI is consistently coming up with lower lows, lower highs, and the price was posting higher highs. This is a class A negative divergence that is happening on the Kotak Bank monthly chart, that suggests a longer term correction, maybe a corrective phase running into a year or so or more can happen before this import of the class A negative divergence running into several years give its full effect. So at higher levels, continue to expect more selling in this stock for whatever reason, unless it crosses 2000 and sustain above that, and thereafter it needs to take out the earlier high around 2200. Only then you can expect a real recovery. But given this kind of a negative divergence happening for several years, you can say the possibility of such thing happening is much less. On the other hand, a corrective fall can well happen into this stock, and that can sustain for a longer period of time. Now we review the PNB chart. PNB is our second review stock out of the three stocks. PNB has also been requested by some people as to what they should do. Some people bought below 50, some people bought above 50, some people bought it around 60. So what would you do? See, PNB can move further up, no doubt about that. But is PNB going to move up further right away? I have my doubts. The reason behind that is the monthly chart. Look at the comment on the chart itself. It says that major resistance between 85 and 89. 85 and 89, the 200 month moving average is around, that is just above 80, say something like 85 is that reading, and there is also some resistance around 89. So I take it that 85 to 89 would be a very strong resistance. PNB will take time to clear that. It will depend on what kind of buying happens. Even if it moves above 89, it is likely to come down, because this is a major resistance area, and the possibility of PNB doing well going forward is definitely there. Look at the base formation and then the upsurge. That shows that PNB can really do well. This is turning into a bullish phase, that is very clear. But when you look at the weekly chart, the bullish phase is very clear. At the same time, the weekly chart shows the resistance zone also pretty clearly. So both from the point of view of the monthly chart as well as from the daily chart, PNB is bullish, but it will take considerable amount of effort on the part of the bulls to take the stock beyond 85 to 89 supply zone. But definitely over the longer term period, PNB, as of now, we can project over a period of 12 months to about 24 months, it will move to something like 140 to about 160. That kind of range can be scaled up by PNB. But immediately, if you are looking for a quick profits, or those people who have been waiting to book some profits can book when it tests 85 to about 89 kind of range. We are reviewing Coforge again. Some people have asked that we have recommended Coforge, and for the last couple of weeks Coforge has seen a big fall. It has been such a big fall that for the first time in several weeks or even several months, I would say that it has not broken decisively the 9-week moving average, but this time it has. It is now trading below the 9-week moving average of 5207. Can it go further down? Yes, it can. But look at one thing. The 3/1 Gann angle come to September 2021, that is around the middle of the chart. You will see that the Gann angle that is supporting is 3/1 Gann angle, and that Gann angle is not being breached on the downside. On the contrary, it is actually giving good support to Coforge. So Coforge is going through a course correction. There is nothing wrong about it, even though the trend line, if you draw a trend line on the weekly chart, that has been broken, yes, but that can happen. But so long as the levels of 4800, that is the 20 week moving average, as well as the Gann angle around say 45 to about 4700, on that region, unless that gets taken out, I would say that Coforge retains its ability to bounce back. I continue to remain bullish because at least decisive breakdown below the 20-week moving average has not yet happened. Now look at Coforge from a monthly chart point of view. You can see that the month of August had been a major move for Coforge, where it moved up very strongly, 700-800 points move on the upside. So this month, despite testing a high of above 5700, it closed at 5100, 5104 to be precise, and this month low had been 5050. Does it suggest that things are very weak? Look at the volume figure. The prior month volume figure is very big, but because of the button for news that has come in this company, the volume figure for the current month is not being seen on the monthly chart. What does it suggest? It suggests that the monthly volume has been more or less like the earlier months prior to August, but August was a huge buying, and look at similar kind of volume led buying that was a precursor to a large movement. So continue to hold Coforge. There is no reason that you need to go out of this software stock. This software stock is going through a course correction. Now we have come to our recommendation section. As I hinted, there will be two PSU stocks. They are resource stocks. How are they going to pan out? What would be their long-term outlook? Watch out. The first one among them is NMDC. Showing you the daily chart of NMDC to give you an idea that a saucer pattern, and then the saucer exceeded its journey on the upside from 130 to about 155, and after that there had been a fall which came down to something like 143 or so, and again it is moving up. It closed at 147. On the last trading session, the NMDC stock moved up by 6 points and closed at 147.95, and it is again bullish. After the correction, it has started moving up. So let's see how is it. See why this kind of a vertical run, and what is happening. For the last 10 years, since 2013, NMDC has been very range bound. Up to 2021, it was below the triple digit level, below 100, and after that, since 2021, mid 2021, it has moved beyond 100 and then continues to be within above triple digit, except for 2 or 3 months when it went down to retest 80 levels. Now in the month of September, it has shown a big move of 24 points for which is roughly something like, say, about 20% move. But look at the possibility. Since you are looking at the monthly chart comes from 2008 to the current date, there is a huge possibility awaiting for NMDC. So it's, if you are buying NMDC, then the stop loss should be below 100 and below 100 on closing price basis, and our targets are initially 217, thereafter 232, and then 304. Up to 304 we are projecting, and we are taking years to about 24 months, 12 months to 24 months for that target to be achieved, up to 304, and your stop loss should be below 100 on closing price basis. So on the downside you see 47 points, on the upside you have more than 150 points. So it's a 1:3 kind of a risk reward profile. Buy NMDC for long term. This is not a short term recommendation, this is not even a mid term recommendation. This is a couple of years, it could take even more. If you can wait, it can perform even better. As I said a little earlier, our second recommended stock for this week, Hindustan Copper. Hindustan Copper, first you look at the weekly chart. The weekly chart clearly shows you that the base formation, initial base formation beyond 2021, that was at much lower levels. Had you been buying around that time, then you are making a lot of money already. But I'm taking it this way that you are going to buy now, or you might have, if you have already bought, that could have been say around 120 or lower or around that level. But now it has already reached 162, that is the last closing price. It posted a high close to about 180, and after that it came down on a correction for several weeks, and then it is again moving up. In the last week it performed pretty well. The point is that copper will be in demand over the next 7 to 10 years. This base metal actually might see a lot of good movement on the upside, because resources, or say metals, minerals, hardly much of an investment has happened worldwide in these areas. So there would be shortage and there would be requirement. So Hindustan Copper is a good bet. So it looks a good bet for the long term. That becomes even clearer when you look at the monthly chart. Look at it from, again, around, say, middle of 2013 to about 2021, early 2021, it was below 100, and in 2021 it crossed 100 only for a brief 2 or 3 months it traded below 100, and then again it has started moving up. So look at the potential, look at the possibilities. The PSU stock can actually give very good return on the upside. So suffice it to say that if you buy at 160, again I would say take a 3-year horizon, if not longer. I would suggest that remain with the stock for much longer period. You are going to get a good appreciation, and initial targets of course would be something like 264 and 323, but if you can wait, say for the next 3 to 5 years, maybe you will see 400 to about 440 or even higher. So stop loss, because I'm showing you technical charts, that's why I would have to say that you have to have a stop loss and keep that stop loss below 100 on closing price basis, weekly closing price basis, and continue with it. But if you are buying Hindustan Copper, buy it for the long term. So Hindustan Copper is our second and final recommended stock. Thank you for being with me. If you like my presentation, then don't forget to press the like button. Subscribe to my channel, share my videos, and also do not forget to press the bell button so that you get the notifications from YouTube whenever I post a video.